Bloomberg Audio Studios. Podcasts, radio, news.
This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. The Bloomberg Businessweek Daily podcast with Carol Massar and Tim Stenovec on Bloomberg Radio.
I do want to dig a little bit deeper into the markets, the U.S. war in Iran, the AI trade, talk of stagflation, and more that's coming at investors. A great voice. Kevin Gordon is with us. He's head of macro research and strategy at Schwab. He's right here in studio.
Hi, guys.
Hi.
Nice to see you.
It's a shame nothing's going on.
Just a few
so
things.
Quiet.
Just a few things.
So tell us how you and the team are like thinking about everything. What really matters? What are you waiting to see if it matters longer term?
I mean, similar to, what a lot of people are waiting to see the sort of scale and the persistence of this. And I think especially in market terms, and these are always uncomfortable situations because you never want to have to think only in market and economic terms. There's always the humanity aspect. Right. But to some extent, they're actually tied together in terms of the economy, angle. So I do think that, from our standpoint, the ultimate impact to the U.S. economy, because that's ultimately, what we mainly focus on, but of course the global economy. I think that you could sort of see it in market pricing, both when we were going through the more aggressive risk-off scenario, but also even today, something like European natural gas futures versus U.S. I mean, you could see the more sharp decline in Europe versus what was happening, on the upside. That to me sort of explains and kind of hints at, the U.S. being a little bit more insulated relative to the rest of the world. But I do think it's, we have to keep in mind, even if oil were to not move much from here, it would still mark a pretty big increase over where we were just a couple of weeks ago.
Up like 60% year to date or something like that.
So the shock is still there. It's just obviously not as severe. So this is sort of where the emotional and psychological, part of it comes in. It's not 120, it's down to 80, but up from 60 is still pretty tough, especially for headline inflation.
Do you think stagflation? Do you even?
Well, to me, it depends on what definition of stagflation you want to assign, because if you were around in the 70s and the 80s and you use the unemployment rate plus the CPI rate as your definition of stagflation, we're still pretty far from that because unemployment is still quite low relative to history.
Right.
If you're going to use a time frame over the past, say, 6 months, and you're going to look directionally, where has inflation been trending, where has the labor market been trending, then you could say there has been a little bit of a stagflationary impulse because the unemployment rate has been grinding higher. Inflation's also been grinding higher, closer to 3%, a full percentage point above the Fed's target. So I think it just depends on, number one, the time frame you want to use, and then number two, also sort of the background conditions.
So which one do you use? So do you say yes or no?
I say there's certainly been an impulse of that. I think there's been sort of a hint of it and a tinge, but I don't think that it's anything to be alarm. It's not capital S stagflation in terms of the 70s or the 80s.
So how do you play this market, given that we've been dealing with so many bouts of uncertainty? I mean, this is not the first chapter of uncertainty that we've been seeing recently.
For us, we haven't really adjusted anything, and we don't suggest that clients do the same, especially in these kinds of instances.
Nothing since the start of the year.
No, I mean, we've sort of came into the year relatively constructive on, outside of the U.S. from a stock market perspective, not against the U.S., but we just felt that, given some of the growth impulses you're seeing around the world prior to this, especially in Europe and parts of Asia, the weak dollar story last year, of course, was a really huge support to ex-U.S. stocks, but we sort of felt that was transitioning a little bit to the growth side of things, so you started to see a little bit of a broader base of support. Still feel that way today, so we haven't really changed any of that. I think that from a broad perspective, somebody who's looking at a lot of this geopolitical instability, the framework that I've sort of used for myself, and I think that most people, hopefully it's helpful over the past year, has been this distinction between what is the front page risk and what is the bottom line risk. Because at the end of the day, as uncomfortable as it may seem, if you're looking at this in a dispassionate way like markets are, they're really only caring about how much of the hit to earnings is actually going to manifest, if at all. So if this is a short-term conflict, which yes, if we do get some energy spikes, not to be dismissed, but if it's ultimately not going to be a growth hit to the economy and just a little bit more of an inflation shock, I think that the market ultimately looks through that, as uncomfortable as it may be.
So how long does this war have to go on? Like, when do you guys start to say, okay.
Yeah. I mean, it's hard to, I think that a scenario of, Brent crude eventually creeping back up towards, I don't know, in the 80 to 90 range, but hovering there.
Okay.
I do think that puts more of a pinch on the consumer. And especially, I was actually just going through some great analysis from the Bloomberg economics team right before this, looking at sort of that break-even price for Brent and the tax refunds coming from the big, beautiful bill. And we're essentially right here at these levels at that break-even point. So I do think that it starts to eat into some of that stimulus that's coming to the consumer, especially a consumer base that is devoting a much higher share of their spending and their income on energy versus, the wealthier share.
So based on that potential bear case scenario, how would you strategically realign where you put your money, where you invest capital?
Well, I don't think that there needs to be some sort of major realignment. I think that the realignment would come if there was a big shift in the growth trajectory of the U.S. Because coming into this, as weak as the labor market has been and as fragile it's been, there were a lot of signs of some stabilization.
Right.
Even if you take January and February combined for U.S. payrolls for both of those reports, I think you could make the case that, January was probably overstated in terms of the strength. February was overstated in terms of the weakness. So you add both of those together, you're probably close to that break-even rate for payrolls around 50,000, considering what the unemployment rate did for both. You have seen a little bit of a stabilization in private payrolls. Not to say that everything is totally fine, but I think some of that fragility was sort of easing by last fall. So as long as this shock doesn't affect that scenario and that picture for labor, which of course it could, but we haven't seen the signs yet because it hasn't been long enough for us to see. As long as that doesn't happen, then I don't think there needs to be some sort of major realignment for a portfolio.
What's more interesting to you? I mean, obviously we just talked about the war in Iran, and again, taking out the humanity and the cost of people and lives impacted as a result. But there's the AI trade. There's the worries about private credit. What is it that you think is something investors should pay more attention to? Just got about a minute or so left.
I think AI from the standpoint of how it's starting to move through the economy and move through the market. And one of the distinctions and sort of points of emphasis we've been making has been, if you do believe that it's starting to diffuse throughout the economy, you're starting to see a lot of the benefits of this technology and this capture. It may not be the best from a cap-weighted index perspective, because if you thought that tech and communication services were sort of the big drivers and the big players at the outset, not to say that they don't participate, but if they're taking a little bit more of a back seat, giving way to the rest of the market, so breadth looks relatively solid, those other parts of the market are just not as big to power your traditional, cap-weighted S&P 500 higher, at least to the degree that we've been used to over the past couple of years. So not to say that the market does poorly, but I think that's an aspect to consider if you're a believer that this continues to move throughout the economy and benefit, the rest of the market.
I agree with you. I feel like the AI conversation is changing in a big way, and I've had conversations about vertical AI and the large language models. Maybe, we could be moving off of that in a big way. Kevin Gordon, thank you so much.
So good to see you guys.
Yeah,
thank you for having me.
Always.
In your new home, too. I love it.
You like what we've done with
I
the
love
place?
it. I love it.
He's head of macro research and strategy at Schwab. Always a favorite when he joins us.
Stay with us. More from Bloomberg Businessweek Daily coming up after this.
You're listening to the Bloomberg Businessweek Daily podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Press Secretary Karoline Leavitt at the daily press briefing. A lot of things she commented on, including a lot of questions about the war, and a post specifically that had to do with the escorting of a oil tanker by a U.S. naval vessel through the Strait of Hormuz. Here's what she had to say.
I was made aware of this post. I haven't had a chance to talk to the Energy Secretary about it directly. However, I know the post was taken down pretty quickly, and I can confirm that the U.S. Navy has not escorted a tanker or a vessel at this time, though, of course, that's an option the president has said he will absolutely utilize if and when necessary at the appropriate time.
All right, that, of course, is White House Press Secretary Karoline Leavitt just moments ago at the White House with the daily press briefing. We care about this because we did see oil actually dip to its lows on that headline of a U.S. naval vessel escorting an oil tanker. We saw oil down as much as 19%, WTI crude down below $80 a barrel. We are still down on the day, but we're not down as much. Still a decline of about 11% at $84.16 a barrel. So we certainly have seen some reaction reaction in the oil markets. And it's safe to say energy investors, global investors looking for some clarity about this war, especially when it comes to energy markets that have really seen a lot of volatility, but really for markets overall. I want to stay on this for a moment and stay in D.C. And let's get to Joe Matthew. He is the co-host of Balance of Power. Joe, it does feel like we continue to see mixed messaging on the war, whether it's from Defense Secretary Pete Hegseth, from the president last night, Chris Wright, Energy Secretary, a post up, a post down, Karoline Leavitt then trying to clarify everything. Feels a little bit messy at the White House right now.
I think that's fair to say. And I'll just remind everybody, if you go back to that post that was deleted, Chris Wright said a large oil tanker passed through about 36 hours ago. So for some reason, the Energy Secretary thought this took place yesterday, that this was almost old news at the time that he was announcing it to a group of people in this video. All of that has been deleted. And I'll give some credit to Bloomberg's own Hadriana Lowenkron, who asked that question of the press secretary. Kind of interesting how little she had to say about this, basically referring further questions to the Energy Department. But you're right. As soon as that post hit, Carol, crude oil down to a 7 handle and then jumped back above $80 a barrel when it was deleted. So this kind of confusion is making and losing money for people today. And there are a lot of questions about exactly where the president is himself, having suggested the war effort yesterday was very complete, to use his words. And now Pete Hegseth, the defense secretary, says this is now the most intense day of bombing yet. And they are threatening much heavier strikes if the Strait of Hormuz remains closed. There is a report out there by CNN that Iran is considering, if not already beginning, the process of mining the strait, which would really change the dynamic here. And the White House will certainly need to have a concerted communications effort at that point.
Yeah, I have to say, to be fair, Nora, you actually sent me a headline, too, or somebody, a terminal user who sent you some information about a report that the U.S. intelligence indicates, as you just said, Joe, Iran is preparing to deploy naval mines in the Strait of Hormuz. I mean, again, information coming. We were looking for confirmation. But to me, it doesn't say that there's any end to this war, at least at this moment in time.
Well, that's true. And even Republican lawmakers we were talking with on the early edition of Balance of Power, Congressman Stutzman, for instance, did have to acknowledge that this is going to be a longer effort. And, we're likely not talking about days. The president was asked yesterday in Preston, a news conference, how soon could this end if we are very complete? And he said, not this week. That was a redhead on the terminal. That goes to show how close investors are watching this. But it's really something, Carol. You're watching the markets every day, and it seems like investors are really looking through a lot of the rhetoric here to try to bring us back to where we were before that kind of panic selling that we saw on Monday morning. So this is a really fascinating moment that we're in.
And, I think it's safe to say, we just talked with Kevin Gordon over at Schwab, this whole idea that despite everything, Nora, that's happened since the beginning of the year, as Joe mentioned, investors seem to be kind of sitting tight. And he said they really haven't changed much in terms of portfolios.
Right. And as we're kind of looking at how this is all trickling in the market, I'm curious, Joe, what is the strategy? What is the thinking here, especially given the fact that we are coming up on midterm elections? What do you take away from this?
Well, it's really interesting timing in that the Republican House conference is in Miami right now for a retreat. That's why the president was down there last evening at Doral. And they're talking about messaging for the midterms and how to strike home the issue of affordability, which is the last thing anyone's talking about right now. In fact, we're talking about $3.50 gas. So there is a real cross current here with what Republicans would like to be talking about in many cases and what the administration is prosecuting in terms of this war, this conflict with Iran. At some point when we get further into primary season, this will become a more urgent matter because that is the issue that will be making voters' decisions at the polls.
Joe, what do we know about tensions within the White House and what we're hearing from President Trump's team? There was a great story on the Bloomberg about kind of how this is playing out among the MAGA faithful and not necessarily playing out well at all, but that within the White House, some of the president's chief advisors aren't so keen on him continuing this war. And I just wonder what we are hearing in terms of conflict there internally.
You don't hear a lot. I mean, this is really sort of the backroom conversation, right? And sometimes leaks come through Capitol Hill and back to us here in our Bloomberg newsroom. Look no further than J.D. Vance. I mean, he's kind of the face of this, having been, of course, an America First politician and a veteran himself who had made the case against going to war with Iran repeatedly during his time in the Senate and on the campaign trail. And now he finds himself having to support the president, but also trying not to bog himself down as somebody who wants to be a serious contender, if not the front runner for president in 2028. But this is causing great confusion more broadly throughout all of MAGA. Steve Bannon's going to have a very different thought about this if you start talking about America first and longer entanglements. But it's fascinating to see even that part of the MAGA community give the president the benefit of the doubt, much like this market tries to on a daily basis, in the hopes that this will be done sooner than later.
So is the administration intentionally leaving room for strategic ambiguity?
That's a great question. And I think that's always a yes for Donald Trump, which is why he's leaving all options on the table. It's not very often you'd ask a politician how they think about ground troops, and it's usually immediately ruled out. This White House has said, no, we're keeping that option on the table in case there is a need for more directed actions by, say, special forces to go find enriched uranium. And they're not saying that out loud, by the way, or maybe even to deal with the matter of Karg Island. All of this stuff has yet to be seen. We have to find out exactly what Iran's intentions are. Having heard from the Speaker of the Iranian parliament, Nora, earlier today, who said Iran is not interested in a ceasefire right now. Even if the president thinks this thing is over, the enemy, as they say, also gets a vote.
Hey, listen, if President Trump isn't thinking about midterms, perhaps, what about the members of Congress who are, of course, not in session at this moment? But
that's right.
I'm just curious about what kind of pressure they might be feeling from their constituents when it comes to this war.
Yeah, it's a lot. They're getting a lot of questions about this, as many of them are home. And as I just mentioned, Carol, they're at that retreat in Miami right now, and they're huddling, talking about this very issue and how do we message around the war? Because at some point, if you're running for a primary election here and you're trying to resonate with voters at home, you got to talk about affordability. And with AAA showing over $3.50 for a gallon of gas, that conversation just got a lot more difficult. And as you've been exploring here on Bloomberg Businessweek Daily, it's not just oil that's going through the strait, it's also fertilizer. And you put them both together and you've got the feedstock that goes right to the grocery store, right to the food aisle. And that's a big problem for anybody who's running for elected office in the majority, which is looking smaller by the moment here in Washington.
All right. Great stuff as always, Joe. Thank you so much. Looking forward to Balance of Power coming back at 5 p.m. Wall Street time. Joe Matthew, of course, co-host of Balance of Power. Catch it on Bloomberg Television and Bloomberg Radio.
This is the Bloomberg Businessweek Daily Podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
All right, from the global macro market to one of the largest market cap companies in the world. We are talking about one that actually turns 50 years old on April 1st. And according to our team, Apple, its new Neo laptop is a game changer for the industry. So we want to get into that and just take a look at all things Apple. And with us to do that is our Bloomberg News managing editor for let's try that again, for Global Consumer Tech. He is Mark Gurman, and he joins us in the Bloomberg News LA Bureau. Mark, good to have you here. Tell us about, you guys took a test drive when it comes to the new Neo. You guys liked it.
Yeah, we've been testing out this new MacBook Neo, $600, $500 with an education discount. It's a great machine. It uses an iPhone chip from 2 years ago, which is able to power you through some light 4K video editing, some light AI apps. But most importantly, this is for students. This is for people who don't need all the power of a MacBook Air or a MacBook Pro. They're basically doing web browsing. They're doing Facebook. They're doing Instagram. They're doing iMessage. They're doing email. They're doing documents. They're using Google Docs. They're using Gmail, right? All the basic apps that you're using on your phone, but you want that keyboard, trackpad, and bigger display. And the price point is quite aggressive for Apple. You know, traditionally, they've not done sub $1,000 machines. This is sub $600. So this is a pretty big deal for them.
I mean, I would imagine this is something that many people have been waiting for. I just think back to my college days, and you're going to find a laptop, and you know the MacBook Pros are always $1,000 plus, and it felt like an investment. So I'm curious, you know, as you got to do this test drive, what's different about this device as opposed to some of their main devices that we know very well?
Yeah, I mean, it has a slightly smaller screen than the MacBook Air, so a 13-inch screen versus a 13.6-inch screen. There's also the 15-inch model of the Air. The speakers are a bit weaker. The processor is clearly not as fast. It doesn't have a backlit keyboard. The display quality is not as good, but it will do pretty much everything you need it to do if you're a student or someone who considers computer work going on Facebook and doing email and some web browsing, right? I mean, 90% of the world, I would say, uses computers for very basic tasks, all things considered, when you compare that to all the things you can do with AI and video editing and what have you. So this is going to meet the needs of a lot of people, and I think this is going to put the Windows PC laptop market and the Google Chromebook market both in precarious positions.
Hey, is it all about, though, being a big revenue generator for Apple, Mark? And I also do wonder how it is, in terms of kind of starting to bring a different part of the consumer base into the Apple universe. So they maybe buy this and then they buy something else. Mm-hmm.
Yeah, it's both. So it's going to accelerate Mac revenue for sure, because it's going to bring new people into buying the Mac. But more importantly, this is going to be a gateway drug, so to speak, to the Apple ecosystem. You'll buy this Mac, and then maybe you'll buy an iPhone, then maybe you'll buy an iPad, then maybe one day you'll buy a higher-end Mac, maybe an Apple Watch, maybe AirPods. And once you get into the Apple ecosystem, how hard it is to leave the Apple ecosystem. So it'll make them revenue in the short term, but more importantly for them, it's going to make the ecosystem even stickier, because now, in many cases, maybe a person's first computer won't be a PC or a Chromebook, maybe it'll be a MacBook Neo.
Well, what other colors do they have? I'm looking at the article that we have on the Bloomberg terminal, and I didn't even realize that they had a variety of colors for a laptop.
Yeah, so that's a first for them, having sort of these more fun colors. So you have that flagship color, which is they call it citrus. It's a combination of yellow and green. There's also a indigo blue, so it's sort of like a dark blue. That's my favorite one. You have your plain silver, which of course you need, and then you have your blush pink. To me, it doesn't really look too different than silver, but they swear it's pink. So that's an offering there too.
Mark, what pushed them to do this? I think that this is something that people have really been pounding the table for years, over a decade even. I'm curious what made them finally do it.
I think it was that a bunch of moving parts and pieces came together for them to be able to do this. It wasn't that they were pushed to do it, it was that they finally had the pieces to be able to do it. Having the ability to run macOS on ARM silicon, so non-Intel chips, that was the big innovation of 2020. Apple moving to its own chips for the Mac, which meant rewriting macOS to work on its own in-house silicon, which is based on the iPhone processors. So the software story. The second piece, having those chips from the iPhone 16 Pro from 2 years ago being manufactured for the last couple of years. The longer you manufacture, the more chips you're able to create, the more efficient you're able to get the production process, and the cheaper you're able to build those processors for. So it's the software story coming together and the chip story coming together. And then the third thing is they've long been developing this new aluminum manufacturing process that's more efficient and cheaper, allowing them to save some of aluminum scraps and reuse it. So all these cost efficiencies and efficiencies was what was able to align for Apple to release this product.
Hey, so they've got this going on, Mark, and so tapping into another piece of the consumer market, if you will. But you write in your Power On newsletter over the weekend that the company still plans to push deeper into the higher end with more ultra devices. So they're not giving up on that.
Oh, no. This is I would say this is a blip on the radar here. Obviously, they'll continue to invest heavily in this Neo line. I think eventually they'll expand the Neo line with new versions. Obviously, you have the iPhone 17e, so that's a mid-tier phone. Neo's a low-cost phone. New Ultra products, so not necessarily named Ultra, but in that higher tier. So you'll see a very high-end MacBook Pro with a touchscreen and OLED display tech in the fall. You'll see new AirPods as early as this year or next year with built-in cameras. Those will be a higher-end version of the AirPods Pro that exists today. They're working on a large foldable iPad. So Apple is trying to hit all price points now, but certainly the premium is the focus.
I just am waiting, Nora, and Mark knows this because I've talked about this a lot and Tim. I'm just waiting for them to get Siri straight.
Oh, please, that would be wonderful. I was just yelling at my Siri this morning.
I don't know. I don't even know where to go with this. Hey, you have another story out there on the smart home display. Another delay, or what do we need to read? Is this trouble, or is it just?
It's exactly what you said. It was that the new Siri needs to be functional, it needs to be released, it needs to work before this hardware product can come out. Because if you release the hardware product before the new Siri is ready, it's just not going to work properly. It's not going to function as intended. And in addition to having a lot of criticism around their AI, you're going to have criticism now around their hardware products as well. And so that's the last thing they want.
So why have they been struggling so much with Siri? I just want to dig a little bit deeper into that. I'm curious,
How much time do you have?
You said, which phone do I have?
No, how much time do you have?
How much time do you have?
Well, tell me what you know.
Well, this is a fundamental thing for Apple. They've struggled with Siri and AI development for many years. They didn't believe in AI being a core component of devices and device operating systems, even when companies were moving in that direction 3 or 4 years ago. They were completely caught off guard by ChatGPT. They had management issues. They had issues where they didn't get enough of the GPUs necessary for training. They overbuilt on their own processors for the Apple Intelligence Cloud. So just a string of different problems that all led to Apple Intelligence not being that compelling of a solution.
Always love checking in with you. Hey, Mark, thank you so much. Of course, that is our Bloomberg News managing editor for Global Consumer Tech, Mark Gurman.
Stay with us. More from Bloomberg Businessweek Daily coming up after this.
You're listening to the Bloomberg Businessweek Daily podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Let's get to our Anurag Rana. He's Bloomberg Intelligence Senior Technology Analyst. He's here in our Bloomberg Interactive Brokers studio. Good to have you here, and great to have you here in-house. Good report?
Yeah, it's actually very clean numbers. I think the things that sticks out most is capital expenditure is not going to go up. I think people are worried about a lot of these cloud providers adding to CapEx, so that's a good thing. With revenue slightly higher, CapEx remaining flat, the backlog is growing. So I think this is a good print from multiple facets.
So, we look at a stock that's down, about 23% so far this year. Many would say that maybe the company needed some good news. The bar seemed like it was pretty low heading into this report.
I think the big thing for us on the call is that just now, OpenAI did a very big deal with AWS. AWS is investing in OpenAI. How does that change the relationship between OpenAI and Oracle? Because that is the mega deal of all kinds, is the Stargate project between OpenAI and Oracle. I think that is one thing that I would want to know more when we get on the conference call.
Do you think it does change or has to change or no?
Well, the thing is, OpenAI has made very large commitments of spending across everybody.
Yeah.
Now, we'll see how that shapes up over the next few years. So it's possible that none of that changes, but we want to make sure that the Oracle management comes out and says it categorically that there is no change in that arrangement. There is some, reports, Brody reported that there is some issue with the Abilene, Texas data center expansion.
Right.
The question is what happens there. So that's going to be another thing we want to learn on the conference call.
Well, I'm glad you went there because I felt like there was a bunch of stories from Brody Ford and team about Oracle and OpenAI ending that plan to expand that flagship data center. Then you had Oracle planning thousands of job cuts in the face of an AI cash crunch. How do you put those together with this?
See, the thousands of job cuts.
Is Oracle in trouble?
No, not at all. See, thousands of job cuts is just a question of, concept of rationalizing of the cost structure. It happens a lot in software, frankly. When you are growing top line this much, you may not need that same amount of, salespeople, marketing people, R&D people. I get that. And especially when AI revenue comes with a lower margin right now.
Yeah.
Over time, the margin improves. So when you have a company like Oracle with very high margin revenue base, you mix high growth revenue with lower margin, the net effect is your overall margin gets impacted. One way to offset is you take care of tight your operating expenses. Microsoft has been doing it for many, many years as well. So this is no different in our case.
Mm-hmm. So it sounds as like there's not as much of a fundamentals issue. I'm curious, how much of it's fundamentals versus how much of it is people being a bit sour on, the artificial intelligence software space this year?
Yeah, but this is more on the AI infrastructure side.
Right.
So very different than the SaaS issue that we are facing. But for Oracle and all the others, whether that's Microsoft, Amazon, the question is, for how long will that big demand for AI infrastructure remain? Right now, for everything that we are seeing, the demand is very high. And in the case of Oracle, it is a little more specific tied to OpenAI. than it is for some of the other vendors. So the big question is whether OpenAI can afford to spend at that rate. So they have had made arrangements of over $300 billion just with Oracle alone.
Which is tremendous.
Yeah, $250 billion with Microsoft.
Yeah.
And then a new contract with AWS. So for a company that size where the revenue run rate is, let's say, 25 billion or somewhere in that range, how can they spend that much? And that's, I think, the biggest question of them all when it relates to all these companies.
Does the jump in those so stocks, again, up about 7.5%, that makes sense in terms of coming off of these numbers?
Yeah, because CapEx is not going up.
Yeah.
They're saying whatever the next raise of RPO increase that they're seeing or the backlog, they're going to fund it from either prepayments or some of another way. So they're not going to raise their CapEx numbers. I think that's the big difference here.
You know, I think it's fascinating, though, too, Anurag, that I feel like some of the AI conversation is evolving, thinking beyond the large language models and the build out of these. Is it right? Are you seeing that too? And I do wonder what it means for the spend. Does that have to continue still at the pace that we've seen?
So when you look at these 3-4 vendors, whether it's CoreWeave, Oracle, Amazon, Microsoft, Google, they are providing the token factory or the base infrastructure for people to build applications. And each one has its own story that goes in tandem with what their long-term strategy is. For Oracle, the OpenAI contract is a big piece of it, frankly. And I think that's where we want to focus on and say, how is that relationship going to, evolve over the next few years?
So, I mean, it's not uncommon that sometimes we'll see this post-market rally and then in the morning you come in and for some reason we're declining, right? What do you think investors will really be looking at that you think will be consequential as we kind of think about sentiment heading into tomorrow? Is there anything that stands out to you maybe from this report or areas that investors may be really critiquing?
Yeah, I talked about the first one, the OpenAI relationship.
Yeah,
right.
The second one is what is the internal rate of return for a lot of the contracts that they're signing right now?
Yeah.
Is it something that is going to be accretive in the near term or is it going to be multiple years out? So that's the second piece of the equation. And the third is funding. As far as this year is concerned, calendar 2026, they've already talked about funding, in the tune of $45 to $50 billion, both from debt and equity. The question is, what happens next year? When you're going to realize the next big backlog next year, how much of that CapEx is going to go up? And how are you going to fund that CapEx? So those are the three things that I think is going to stand out on the call today, which will dictate the stock tomorrow morning.
I mean, the OpenAI is just fascinating, right? Great to be kind of have that exposure in that relationship, but it also puts you at risk, right? You're vulnerable if that customer backs off at all.
Yeah, but Oracle can say the same thing. Well, Microsoft has the same situation, frankly, because Microsoft is dependent on OpenAI's technology for their products. It is highly dependent on the flow through of the hosting of the app and so forth. So I think OpenAI is an important part of the overall ecosystem. But the question is, can they afford to spend at that same rate for multiple years to come?
How are you thinking about Oracle as it stacks up against some of its peers right now?
So 4 or 5 years ago, they were not in the game at all when it comes to AI infrastructure. It was basically Amazon number one, Microsoft number two, then Google, and then, a fight is there. But because of OpenAI, these guys are going up quite a bit, and, they're gonna have hundreds of billions of revenue just on cloud in the next several years if nothing goes wrong. And that puts them actually, it could be very close to Google or even above Google, depending on where they are.
All right. So going back to the call, if they say something about OpenAI, that would be troublesome. What else?
Well, the thing is, it's a question of whether they say, well, we're going to raise our CapEx quite a bit next year. Not this year, because they've already disclosed that. I think those are the things that we will be looking for.
All right. Great stuff. And we're going to be looking for your work. Anurag, thank you so much. So great to have you here in our studio.
Yes.
Thank you so much. Bloomberg Intelligence Senior Technology Analyst Anurag Rana here in our Bloomberg Interactive Broker studio.
This is the Bloomberg Businessweek Daily Podcast. Available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.